Hello everyone, welcome to AO Accounting Academy. Today I'll be talking about some of the ways you can use to ensure that you don't overpay tax to HMRC. If you stay tuned, I will tell you 7 different ways you can use to ensure that you don't overpay tax. Please don't overpay tax. Stay tuned. The first thing you need to do is to check your tax code regularly. What did I say? Check your tax code regularly. If you check your tax code regularly, you will have seen it if HMRC has applied some changes to your tax code. Maybe they have changed the tax code from the usual 1257, well, which is what HMRC use for most people in the UK, especially for those that earn below £100,000 per annum. So if HMRC has changes, by checking your tax code, you will have seen it and you discuss your case with HMRC. Sometimes HMRC will have changed the tax code from the 1257 maybe to OT, which means that you have actually exhausted your tax-free allowance. So some of these things you need to check your tax code regularly. So by doing so, you'll be able to know and discuss your case with HMRC. Another way to ensure that you don't overpay tax to HMRC is to use all allowable relief. What did I say? Use all allowable relief. Allowable relief can be in the form of mileage allowance, if maybe you use your car for your for a business, or maybe you have some expenses, some refundable expenses that is being paid to you by your employer. So this can be claimed back from HMRC, because if you don't do that, like okay, your employer give you some maybe you spend some money on your tools, maybe you're working from home or doing something, and you have expended this from your pocket. So your employer paying it back to you is not a benefit to you. So you need to find a way and claim this from HMRC. You might also need to consider paying into a pension. If you pay into a pension, you can save a whole lot by paying into a pension. Because, for instance, let's take an example of somebody that earns over £100,000 per annum. In the UK, once you start earning over £100,000 per annum, HMRC will take £1 from every £2 that you earn over that amount and use it to reduce your tax-free allowance. So consider paying much more into a pension so that you can avoid the trap of maybe earning over 100,000 and that reduces your tax-free allowance, and automatically once that tax-free allowance goes down, it means that your tax liability will go up. So consider paying into a pension, and because that can help you save a whole lot. Do you know that ISA can also help you to save a whole lot in terms of tax to HMRC? I'll tell you why. Interest, dividend, or any other gain through ISA accounts are completely tax-free. And another reason is that you have an annual allowance of £20,000, which you can also use to reduce your tax liability through the ISA account. So ISA account, you know that is individual savings account. So you use ISA account to reduce your tax liability. You can also claim property and business expenses properly. If you claim it properly, you save a whole lot. Okay, for instance, you're a landlord, maybe you have done some repairs in your house. So the cost of doing these repairs, you can claim it from HMRC because you know you are also earning rental income through that house. So if you incur expenses like maybe repair cost of the bathroom or something in the apartment that you rent out, and you are not claiming it back from HMRC, you are not doing yourself any good. So you need to claim these expenses properly. If you work as a businessman, maybe personal, maybe the rental expense of the place that you use for your business, you also need to claim this so that you can reduce your tax liability to HMRC. Avoid emergency tax trap. What did I say? You need to avoid emergency tax trap. What is emergency tax trap is that sometimes when you maybe switch job from one job to the other and you don't have your P45 ready, HMRC will apply emergency code for you, so which could be maybe W1 or M1. So in this case, you might be paying so much than you are supposed to pay. But if you get your P45 once you leave a job, that will be sent to HMRC and that will be used to do your tax code, which will be the usual 1257, which can help you to reduce tax liability. So avoid emergency tax trap. And lastly but not the least is that you need to do tax review every year. How do you do this? Check your payslip properly. Check your payslip from 1st of April to 31st of March of that tax year to know whether anything has changed. That's number one. You need to check your P60 PCC, you can be able to know what has happened over a period of time. Maybe in the course of a few months ago, HMRC has changed your tax code. You can even use that to claim overpayment of tax to HMRC if you have actually overpaid tax. And also another thing I also strongly suggest is that you need to have HMRC online account. That online account, you can log into that account anytime and see any changes in your tax code. Also, another way to do it is maybe you have there's this HMRC app that you can download on your Apple's App Store, maybe or Play Store, Google Play Store. So in these ways, you can be able to know if anything has changed in your tax code. So ensure you do a tax review on annual basis to know that changes has happened to your tax code. I believe I've been able to tell you some of the ways you can use to ensure you don't overpay tax to HMRC. If this video is really meaningful to you, or maybe has done one good or the other to you, please like, share, and subscribe so that you can get insight of this nature going forward. Thank you so much. Stay tuned.